Hi, I'm Ron Carmichael, and this is SimplyFXTrading.com. You should already have seen the initial introduction video to the SimplyFX course. If you haven't, then I suggest you take a look at it first. Why? Because to really benefit and understand the specific points I am about to cover now, it will all make a lot more sense and be clearer. What I'm about to cover in this video and the other example videos is based on understanding some of the key elements of the SimplyFX strategy. In this brief video, what I will cover are some of the SimplyFX trading strategies. And I'll do this by showing some real-life examples of the strategy at work. And these will be real trades as they set up. I'll explain the before and then as the trades actually materialize, so you can see the strategy at work. But first, just to recap, make sure you have reviewed the introduction video. If you haven't, go and take a look at that first. Have you got your copy of SimplyFX, our downloadable course? What you should have received looks like this: SimplyFX Concise Guide. This covers a lot of the other essential elements that you really need to understand in terms of getting started with Forex, such as risk and money management. These are absolutely crucial, and I can't stress this enough. You'll hear me keeping going on about it, but risk and money management are everything. Watch this video first, and at the end I'll tell you where to go and get your copy. Let me recap also on what we covered in the introduction video, and this does not replace what's already been said, so you really do need to go and have a look at it. But let me just quickly sort of cover some of the key points again of the actual strategy. What we talked about in the SimplyFX course and also in the video, and is taken further in our subsequent videos, is the chart patterns you want to trade and those you don't want to. We then also define what is a trend, and it's surprising how few people actually determine or define what they say is a trend. So we determine a trend: higher highs, higher lows, and lower highs and lower lows, etc. But again, have a look at the other videos. We then talk about support and resistance. This is really important. Most people talk about trend resistance and misunderstand this, and this goes for the professionals as well. They talk about trend resistance taking out resistance at previous highs when there's no other points of reference. What is important is to understand what is true resistance, and we talk about where two or more touches happen at a particular level. This is key. Then we start combining a number of elements to form the strategy. This chart, obviously at the top, shows you the rising trend, a market going sideways, and then as it starts turning tail. The important elements are here when we introduce our use of the RSI, the Relative Strength Index, and the MACD, the moving average crossover, the moving average convergence divergence. These are really important, and the way we use them is different from the way that they're generally looked at. Combined together in this way with the chart patterns that we're going to talk to you about makes it very, very powerful and highly effective. Okay, so let's start looking at some of the actual trades themselves. What I've got here is a number of charts, so I'm now introducing some new concepts which we probably really haven't sort of gone into a lot of depth, although we take to a far greater significant level or far greater degree in our subsequent courses. But what we're talking about here is, you can see basically we have this is the it's a Euro Swiss franc, Euro Swissy charts, and we start with, we've got on the right here, we've got a 240-minute chart, which is 4 hours, a 60-minute chart, and then obviously, the 15-minute here. What is important to do, and we talk about this more, dependent really on the time frame or the amount of time you can spend trading, and by that I mean the amount of screen time you have available. If you've only got 1 hour a day, then you're likely to be taking signals based on longer term charts. So you may be combining a weekly chart with a daily. The daily you're using as your timing, while as for instance you've got 4 hours a day behind the screen, then you're going to be using shorter term charts. The actual patterns don't differ, okay? It's just the time frame and frequency by which you may be able to trade and the amount of time you can dedicate to it. That's the beauty of the Forex markets. You can trade them literally 24 hours a day, most days of the week, but also you can then determine based on the amount of time you can afford to trade. Let's talk about this one. What's important to understand here and why we use a longer term time frame is we trade with a trend. So what is the longer term trend? And we don't go counter trend. Certainly in the early stages we don't go counter trend. So if the major trend is down, then you'll be looking to take trends based on the shorter time frame charts as for down trades. Okay, if the chart is the major trend is up, then you're going to look to take trades based on a bullish sort of outlook. Okay, so in this one, in the Euro Swissy, now this is part of a larger trend. If you go back, we've got more charts than you normally need here. You take one of these, but what you can see is the trend is down. The major trend was down. This was actually a corrective rally here, which then failed, and then the market started turning lower again. And here again, you can see we've got some little sort of pattern of the market sort of having fallen, chopped back. In fact, you'll probably notice if you were to draw levels in there, you'd probably have Fibonacci and other levels. But again, that's something we can cover off later on. Then you've got this as confirmation, but let's just stay with this one. The trend's down again. We know that. Okay, and then for the timing point, what we're looking for is here, and I hope you can see this clearly enough. But the key elements are here. With what we've got is we should really have a flat line in there. Okay, two touches, one there, flat level. Okay, that tells us something. We can start looking for more confirmation. Now the really important part is the way we use these, the RSI and MACD. And what you can see here is we don't care about the actual levels themselves, but if you see that top in there, we now have a lower top, okay, on the RSI. So that's great, that's confirming. Probably slightly harder to see, but also the same is with the MACD. It's actually going lower, so we're getting lower tops in here. Alright, which means, and you can still see this trade is actually still setting up, so we'd wait for it to break. The important thing and the important reason for reading the SimplyFX course is you'd need to determine the position size and your stop and your profit target. I'm not going to go into that in this video. Okay, so this is the trade before. Let's see what happened. Okay, so what we had was, in fact you can see it, this is based on some other measures, so just ignore that for the time being. But our line was, excuse me, that was not quite straight, but our line's in there. Okay, which is what we're waiting for the break, and what we were looking at was these. Okay, they were confirming, this was confirming, so we were just looking, we could then basically have our entry price, stop in obviously at the same time, and profit target. This one broke very nicely, bang, off it goes. Alright, so, and that's on the 15-minute chart, and you can see that was, yeah, very neat trade. So we'd have been out of that. Okay, that's probably enough for this video. So to learn more, go and grab your copy of SimplyFX if you haven't. To do that, you need to go to www.simplyfxtrading.com. I'll just repeat that. That's www.simplyfxtrading.com, and you'll be asked to enter your name and primary email address, and then you'll have instant access to the downloadable version of the course. And as I said, it'll cost you absolutely nothing at this point. We're confident that if we can help people become more successful traders, they'll come back to us for more and more information. And we are really keen, and I can't stress this enough, that myself and the team at TraderWays are really keen to help as many people as possible succeed as Forex traders, particularly in this current harsh economic environment. Forex trading is providing unbelievable opportunities at the moment for those who know what they are doing. And for our part, as I say, we know that providing people with the right tools and disciplines, we will build a stronger long-term relationship with you. We want you to succeed. We know this works. You just need to learn and apply it. And please remember, trading can involve substantial risk. You must not trade with money you cannot afford to lose. Always use sound money management principles as we clearly define. If you need more information, talk to your broker. Thank you very much, and bye-bye. Good luck.